Good morning, welcome to this weekly market update from AGM Markets. Today is the 29th of October 2012. What we'll do today is go through some technical analysis on Euro dollar cable, dollar yen, dollar Swiss and gold. Basically just trying to give some sort of weekly outlook into the markets. We'll have a look at the weekly chart, daily, 4 hour and maybe 1 hour. Just trying to give some sort of weekly perspective in the markets, trying to give some sort of bias in terms of are we bullish, are we bearish, and we'll have a look at a few setups if there's any in play currently. I won't make any I'll say that again. We will not be making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com. We have 3 moving averages on each of these charts. The red one is a 55 simple moving average. The gold is a the red is a 55 simple moving average. The purple is 100 simple moving average, and the gold is a 200 simple moving average. Okay then, let's have a little look at the euro dollar. Let's just quickly look at the weekly chart. We won't spend too much time just in terms of the candles really. Have a look at last week's candle. Automatically the first thing you have to keep an eye on in terms of bigger term picture is this trendline resistance that we've got on this euro dollar chart on the weekly. So you can see we're currently holding there. Nothing's really changed in the last few weeks. It's been very choppy over the last few weeks in terms of sort of the last 6 weeks really, just going sideways. Just getting chopped up in between this 55-week moving average, which you can see here. So it's just slicing through that, and it is looking for some sort of direction. And you can only really be a really hardcore bull on this weekly if we get a break of this trend line towards the upside, in my opinion. In terms of last week's candle, nothing much really. We've got a bit of wick either side of last week's candle. When you could say it is a bearish candle, but I wouldn't be too bearish on it, to be honest with you. It is still looking quite aggressive towards the upside. We are technically in an uptrend. If you flick to the daily chart, we're still in this uptrend here, but it is struggling to hold. You can kind of see it's starting to break, but it's all the key daily candlestick close is important today. And also you've got this 55-day moving average. We've pretty much tested that this morning. We're now starting to bounce back above this trend line. So keep an eye on the daily candlestick close today and see will it close above this trend line or below. But of course the 55-day moving average is always a key moving average, so keep an eye out on that. And if we do come below, then check out this 200-day moving average, which also acted as a previous support here to your left. So in terms of this chart, also another thing to keep an eye out for, in terms of this 4-hour chart, one key fib I'll be looking at today. If you draw from highs to lows here, bear with me 2 seconds here. If you draw a fib from this recent bounce here to the highs, normally we look at the 50% and the 61.8, but let's stick on 78.6 level. You can see that we're bouncing off the 78.6 fib level. So as you can see, there's also previous support to your left here, previous support there, and it coinciding with this fib level, so kind of a nice little confluence support level. So keep an eye on the 4-hour candles here. It's starting to look quite bullish now. We could get some sort of hammer pattern, but in terms of a shorter term move, this fib is one that I'm definitely keeping my eye out for. I'll always prefer the 50% and 61.8, but it's just for anyone looking at different sort of fib levels and see how they react to the market, keep an eye on this 78.6, because it is reacting very well to this level. Also kind of coincides with the sort of 129 handle as well, just below the 129 handle, this level. So yeah, keep an eye on that. But yeah, in terms of euro dollar, that's all I'm really focused on. I wouldn't really shorten up any. There's If I flick it to the 1 hour, there's nothing else that really interests me there. I'm more focused on this 4 hour chart and how this reacts to this level. Okay, let's have a look at the cable chart on the weekly. Last week's weekly candle, very, very bullish there. We spoke about this 100 week moving average. The last sort of few weeks really, we said, we were testing this key resistance up here at around the one spot 62.75 area. Key resistance there after we had 3, 4, 5, 6, 7 bullish candles there. We were due a retracement, and we said the first key support on this weekly is this 100 week moving average. Surprise, surprise, we've touched that and we've reversed off. So last week's weekly candle is a big reversal candle there, so keep an eye on the cable. In terms of bias for cable, in terms of purely candlestick patterns, on this weekly chart you have to say it's bullish now, in my opinion. I mean, the key resistance on this weekly is still that same resistance level there. We've had 2 key kind of retracements there, especially this one here. We had 4 bearish candles in a row, and we've now reversed now, so the odds are towards the upside in my opinion. But in terms of if we get any sort of real bullish momentum, we need to get above this this 1 spot 62.75 level. In terms of the daily chart on cable, we have a decent trendline support there, this is holding, and we also have a trendline resistance here. Both those are intact, so if we're going to get any break towards the upside, we need to break above this trendline resistance. We also have the 55-day moving average here, which is currently acting at key support now. You can see it's currently testing that, and it's trying to bounce it back above, so keep an eye on that. In terms of the 4 hour chart, another nice technical supports there with the 55 bar moving average and the 100 bar moving average there on this 4 hour chart, acting as very decent support. It's a very technical chart here, cable. I mean, on the daily we had the 55-day moving average, and on the 4 hour we also had the 55-day moving average with the 100 SMA as well. So nice key supports there, so keep an eye on that. It looks like it, after we bounced off this trendline resistance, it's now come down, now testing off of these moving averages, and we could see some sort of rotation towards the upside. It's a very technical chart, cable, but yeah, that's how I'd have my chart set up currently on cable. In terms of dollar yen on the weekly, nothing much of interest really. I mean, the only thing I really keep an eye out for is this 100 week moving average. We can see we had a kind of bearish candle there. I mean, yes, it is green, but keep an eye on that upper wick. There's a decent sized upper wick there. We had a close below this 100 week moving average, so the odds would be towards the downside in my opinion on this weekly chart, and the first key support would be that 55 week moving average, there, which stands at 78.94. On the daily, you can see it's just chopping around this 200-day moving average. Currently we're pretty much sitting on that at the minute. It's looking for some sort of bounce. If we do continue to come down, then of course we've got the 100-day moving average here, which is at 78.67. If I draw a fib from the lows to highs there, we have the 50% just above that 100-day moving average, so keep an eye on that if we do get any further sell-off on dollar yen. But I personally don't think it's that much of an interesting chart. I think euro dollar and cable much more interesting in my opinion. So yeah, I personally think it's just more interesting chart, to be honest with you. This is the dollar Swiss weekly chart, still chopping around this 55 week moving average. I mean, pretty much for the very similar to euro, remember, they've pretty much been mirroring each other. So on euro dollar we have on the weekly that 55 week moving average, which is chopping in between it, and on dollar Swiss exactly the same here. So yeah, there's nothing much in this weekly chart, very choppy. In terms of a shorter term time frame, it's all about the 55-day moving average, similar to euro as well on that daily chart. Euro dollar's been supported by that 55-day moving average, and on dollar Swiss it's currently capping pretty much to the pip there. We had a nice spike and it's bounced off, so keep an eye out on the daily candlestick close. If it is a reversal, then we could start to tank towards the downside. Any buyers out there in the market, on the 4 hour chart here you've got a nice little trendline support, and we have quite a few moving averages below there, so keep an eye on that. But yeah, that's how I'd have my chart set up pretty much. I mean, I'd rather be trading euro dollar to dollar Swiss in my opinion. Another thing we do have here on this 1 hour chart, I remember looking at earlier, if you draw a Fibonacci retracement from that recent swing low to the swing highs, we have a nice clear bounce off the 50% fib there, and also that coincides with the 55 hour moving average as well, and we really have popped up there. So keep that on your charts if you're looking for a shorter term moves. We do come back down and keep an eye on that key support, which is at around 0.9339. Let's have a look at the gold chart on the weekly. Still nothing much has changed in terms of this weekly chart. In terms of the weekly candles, so let's just bring this trend on a bit. In terms of the weekly candles, we've now had 3 bearish ones in a row, and we did say we were due a retracement. We said a few weeks ago, after all these bullish candles in a row, odds are for some sort of retracement. Very similar to cable, how we are testing a key resistance there. If you look at that, the weekly chart on the cable, key resistance there, pretty much a double top, one there, and on gold weekly, one there. So key resistance being held, and we're due a retracement, very similar to cable, and that's what we're getting. So the odds were really on this weekly chart, if any sort of healthy buying opportunity would be at this 55-week moving average, which is at around 1668. That's all I'm focused on that weekly chart. I know. So one other thing I would keep an eye out for is if you draw a fib from the lows to the highs there, and the 50% kind of comes in at around this 55-week moving average anyway, although the 55-week moving average is just above this 50% fib, so keep an eye on that. In terms of the daily, nothing much of interest really. I mean, you can see we still got that the same fib set up on there, and then of course, I mean, we're now below the 55-day moving average, so keep an eye on the 100-day moving average, which is around there, just above the 50%. But the daily chart is not that much, it's not very interesting to me, to be honest with you. And in fact, I wouldn't even shorten up any time frames here. I mean, the only thing, we've got the 4 hour here. You can see we've got a nice trend line resistance which is capping there, so keep an eye on that. But I would just stick to the daily and the weekly, so I still think we are due a healthy retracement, and that's what we're currently getting. So, but it has been a very technical chart, gold, and I still think it's all about buying opportunities, to be honest with you. So yeah, I just pretty much leave it on the weekly, and keep an eye out for that 50% fib and the 55-week moving average. Okay, that's all for the charts. Have a look at the Forex calendar. What have we got coming out this week? Very, very quiet Monday yet again. No high impact news. Tomorrow we have some overnight Japanese data. 9 AM tomorrow we have ECB President Draghi speaking at 9 AM. We also have an Italian 10-year bond auction out tomorrow. And at 3 o'clock GMT we have US consumer confidence data. On Wednesday we have some Aussie data overnight. We have quite a bit of mid-tier Eurozone data out there. So we've got German retail sales, etc. And at 1:30, for any Canadian dollar traders, we have at 1:30 GMT we have the Canadian GDP numbers month-on-month forecast at 0.2%. Basically expected to stay the same there. On Thursday we have overnight Chinese manufacturing PMI. That's always interesting to have a look at in terms of risk appetite, because that does affect pretty much all the markets, especially Australian dollar and Euro dollar as well. And at 10:30 we have UK manufacturing PMI data forecast at 48.1. 1:15 with the ADP non-farm employment change data, and we have the weekly jobless claims as well. And a big piece of data at 3 PM, because it will be the start of the month. We have ISM manufacturing PMI forecast at 51.2 from the previous 51.5. And on Friday, of course, it's all about non-farm employment change data. It's forecast at 120,000, so a slight increase we're expecting it from the previous 114,000. And you have to remember, this is the last non-farms before the US elections, so it will be, I would expect a lot of volatility in this bit of data, because if it's a very good NFP number, then we'll expect Obama to stay in, to be honest with you. And I personally think that will be weak for markets. Markets want Romney to come in because he's more pro-business, in my opinion. So that'll be very interesting to see that, of course, as it is every month, but especially this month as it's just before the elections. And of course, at the same time, we have the unemployment rate, which did fall last month to 7.8%. It's expected to come up a touch higher to 7.9%. So yeah, very interesting week this week in terms of technicals, in terms of the news. There's plenty of news out. It's the start of a new month. We have the elections as well. So yeah, very, very interesting week. Hope you've enjoyed today's video. Have a great week trading, and I'll catch you next week. Thanks for listening.